The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 23rd, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you as well. So feel free to pick up that phone, 877-927-6648. Of course, internationally, which number did I give you? 877, I hope, 927-6648. And then internationally, 727-445-1044. How about that? I can't remember what I just said 2 seconds ago or even less than that. But I will remember. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 33 points at 20,808. S&P is flat. 2362 is what she's printing. NDX 100 up off 22 points, 0.4%. NASDAQ Composite down a similar percentage. That's 26 points. Russell 2000 is off 0.7% or 9 points. The semiconductor indice is the weakest, off 1.5% or $15. So we'll certainly want to take a look at that out there. Transports are down 1% or $94. Gold is up 17, 1.5% to the upside. Silver's up nearly 0.9% or 16 pennies. Light sweet crude up 77 cents. Leading the charge here to the upside, it is Lending Tree up nearly $17 or 15%. Marriott Vacations Worldwide up 8% or $7. Bluebird Bio up 6. Masonite International up a little over 8% or nearly $6 out there. To the downside, you've got Priceline off $14, less than 1%. Interdigital down 14% or $14. Tesla's off $13, about 5%. So we've got a few stocks to look at, but I want to look at what you want to look at out there. So feel free. You can send me an email as well. If you can't call in, Steve at TFNN.com. And inside the Tiger's Den, any ping will do. So let's, what do we want to look at first out here? I think the first thing we want to look at and pay attention to, and there's many things out here, but the first thing that we're going to look at is we had a decent downdraft earlier this morning. It is, as one of our Denners pointed out, P, I believe that is a he, P, that, the market sells off to a certain extent through the morning, and then right around when international markets close. I didn't see if P made that little check mark there, but right around the afternoon time frame, early afternoon, lunchtime, just before lunchtime, we see the futures markets basically make a bottom. So we're going to find out now. That's actually very bullish for our marketplace. Hello, no kidding. Wow, Steve, you really figured that one out. You nailed it, didn't you? But actually, it is more bullish with regard to how we finish the day, because many times you might see where futures are down a bit. And what that, in essence, is doing when we see the way, we'll call it the SPY, the way that opens up, it's going to open lower. It's catching up to what the futures market is doing. It's really catching up to what took place since last night's close. It's really catching up to what overseas traders are doing. And in essence, we have seen overseas traders over a long period of time actually sell the U.S. stock market, via the futures contracts, only to have the U.S. traders, the U.S. market come in and go ahead and close out near session highs. When you see that take place, it is very bullish out here. Subscribers know that periodically we go ahead and we take a look at that. As an example, I wonder where in the Sam heck I put that. Maybe it is on this tab right here. And one way that I use to monitor this activity and try to put it in an indicator is taking a look at just simply last night's close versus this morning's open versus today's open versus today's close. Now, I can't do that for today, but I can do that as of yesterday. And when the U.S. market is stronger than the international market, that's where we get this little most recent bullish crossover. You'll see a blue line and a black line. Those are representing the percentage differences between the opens and closes. When you get that little crossover, as this did back here on January 31st, it is another bullish signal. Of course, we can take a look inside the S&P 500 here, and you will see Stevie's red line. And in the case of Stevie's red line, price this morning did not even get down to touch that little trampoline line, oftentimes a trampoline line. 2352.48 is what it is printing as we speak right now. That'll change as price changes throughout the day. But the S&P 500 via these two indicators is bullish when we take a look at the daily contract out here. Now, there is a question inside of the Tiger's Den that says, is there any evidence that the Dow Jones Industrial higher high today is an exhaustion move out here? And if we just look at the 30-minute chart out here, I would say the answer is no. Typically, on an exhaustion, what you would see is a big, huge move, even with volume, to the upside out here. I see it from the standpoint of being exhausted, meaning that if we just simply, and Tom is the godfather of utilizing the 10-minute charts and taking a look at volume. This happens to be a 30-minute chart that we have up on our screen, but we can do basically the same thing. If we take a look at, now I'm not going to look at the 9 to 9:30 session out here, but I am going to go ahead, which is really where the swing point high is. Instead, I'm going to use that bearish engulfing candle that formed between 9:30 and 10. And the volume there was 15,000 contracts. Now, on the push to the upside, on a 30-minute basis out here at noon, what it was doing it with as it was testing resistance by that bearish engulfing candle, by the swing point at 9 o'clock, was doing it with very light volume, 10,000 contracts versus 15,000 contracts. So missing one-third of the volume out there. What we also have out here, John, is if we take a look at the current profile, 30-minute profile that formed, we can also see that the center of the box, a little bluish type line on my screen, slightly closer to the top of the box. So really sellers should be in control of this price area, 2802 to 2741 out there. If in fact, let's say that I have inaccurately answered your question, I've just totally blown it and miss it, well, and that's always a possibility. That's a good possibility. What will we see? We will see a close below this swing point that took place between 11 and 11:30, and a close below 2741, the bottom of that 30-minute box. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And as our Denners pointed out as well, the Dow, we take a look at the Dow futures contract there on the 30-minute basis, did make it back to its highs, whereas the other equity futures contracts have not. If we take a look at the ES Mini as an example out here on its 30-minute time frame, we can see the push lower on its push back to the upside out here on declining volume, right? So if we take a look at this from the low that was formed between 11 and 11:30, you can, whoops, I didn't mean to grab that line. I meant to grab a different line out here, you know, the kind where I can show a descending trend. There we go right here. So you can see you've got, volume has not been picking up as price was moving lower. That signal then was as price got up to the 0.618 retracement, which is 2361, which also happened to be the top of the brand new 30-minute profile that formed a half an hour ago, 2361.75. That said, that was the extent of this move. So the key is going to be, or a key would be, hey, is that just the C point of an A to B equals CD to the downside? Now, you might say, what in the heck are you talking about? And I will go ahead and put my ABCD tool on here. I'm surprised it's not on here, but surprise, that's okay. We can add it real quickly here. So if we are going to see a move to the downside, there's a number of things that will unfold. One, this in fact would turn into an A to B equals CD to the downside. Now, that's always a little bit dangerous because we know with such a strong trend that any A to B equals CD to the downside is nothing more than a Gartley buy pattern out there. But this would give you a projection of about 2349, 2345 out there would be its projected move. Not projectile, but projected move. If that is going to take place, and there is a discussion inside the Tiger's Den that a top is in. And if a top is in, you would then see the following. Number one, what you would see is inside the New York Stock Exchange, you would see the advanced decline oscillator get and close below zero. You'll see right now the reading says 10.48. That means there's not enough net declining issues to turn that negative. Is that a requirement? Yeah, it is a requirement out there. Now we have that fulfillment of that requirement, in essence, as we speak right now, 1:20 in the afternoon, inside the NASDAQ composite. You got the whole 9 yards, whatever that means. And actually, we do know what the whole 9 yards means out there. I probably shouldn't say that again. But in any event out here, what we do have is the whole 9 yards. You got a nice little bearish reversal candle inside the NASDAQ composite. Where is it going to finish today? That is the question. Inside the Dow, we're not anywhere close. Really, we're not anywhere close to its advanced decline oscillator turning down below zero. So what is left that needs to occur for those that have the opinion that the top is in out here? You need to see good old VIX, the VIX index, close above its 50-day exponential moving average, which is 1193. You're traded 1185. Yes, earlier in the day, you bounced all the way to the top of that little Bollinger Band. And see how it's kind of getting narrow? Very narrow as we speak. It is going to bust out of that narrow band at some point in time. It's just that today may not be the day. So what's that mean if price, the VIX index, the spot VIX index, closes below 1192 today? It means don't expect this to give you a topping signal. In fact, it will not give you a topping signal. And so at this stage of the game, the answer is no. A top does not appear to be in. That's as of 122. He asked me that question at 4 o'clock, and I may have a different answer or a confirming answer, because to me, it is that simple. Just sit back, let the market has one role, and that's to communicate to us. And that's what it does. And it does that by forming bullish and bearish reversal signals at pattern completion areas. And it does it in the middle of the pattern to a certain extent. It's just telling you've got a little bit of a hurdle, but when you run into a little bit of a detour, when you're driving from point A to point B, which is what the market does, and you run into a detour, are you just going to pull over, park the car, and say, that's it? I don't think so. Sometimes you detour, you got to turn around a little bit, right? That's why the market hits resistance. It turns around a little bit and tries to find another method to get to where it is headed to. Now, speaking to where it is headed to, where is it that Goldilocks is headed to? It's up $17 right now. That is a positive. In fact, it's a super positive. We can see that it is trading above its daily TAS market profile. 1241 is the number. If it closes above this level, it is a huge message that price wants to move higher. Or is it? Well, if we go take a look at the GLD, because everybody at home can do this, everybody that can pull up the GLD, we're going to see right now as we are trading, in essence, 4 hours into the trading session, we have volume of 4.9 million shares. Now, on a 4-hour basis, straight line method out here, that says that what the GLD should do at the end of the day, and you know I hate that end of the day, but I do mean at the end of today's trading, should do volume of around 8 million shares. Now, the swing point has 9.6 million shares. The swing point of at least another A to B equals CD to the upside. So it's over its swing point with light volume. Now, nonetheless, here is where you take your bearish reversal signal, your potential pause button, because there is the bearish engulfing candle out here. We know that that is resistance. You say, what is resistance? The top of the two sessions out here, because the bearish reversal signal, that bearish engulfing, engulfed the prior day's candle. 118.59 is the number. If price closes above that, if even on light volume, and the GLD tomorrow, next day, comes back, tests that level, and rejects it, then an old area of resistance has then become support. And that's important because all traders, if there is ever a tool that you want to be able to understand, right, it is to be able to identify support and resistance. And that is in the game of risk, in which we are taking a look at here. This is how the market communicates to you and I. So can you form an A to B equals CD? Can you complete an A to B equals CD and do it on light volume as you pass the swing point? Absolutely. Market can do anything it wants. In fact, in the case of gold, what we know is that an influencing factor happens to be the yen. So if we take a look at what is the yen doing, is it confirming this breakout? Well, the answer isn't as equivocal. Oh, boy. That was really smooth, was it not? What price is doing inside of the U.S. dollar Japanese yen right now, been trading in a fairly tight range. That range being from the 111.67 area. Quite frankly, it's been only trading up into the 113.70 area, the top of its daily box. We've seen that the past couple days. Can't bust them up, try to go bust them down. The bust them down in this case here, by the way, the daily profile is not providing us. It is equally weighted with regard to where the center of the box is out here. So no one is in control, or at least we cannot conclude that buyers or sellers are in control out here. Moving lower and having gold move higher, that's normal. A lot of activity will take place or can take place while you're sleeping. And so you can miss some kind of a move out here. But is this giving us, whereas gold is busting through its swing point from, let's say, February 7th or somewhere right around there, the yen is not doing the same out here. Just not doing it. So am I convinced that this is the breakout inside of gold? It's got light volume. The yen's not confirming. I don't know. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks, and one of our listeners, Greg in Austin, By the way, Greg and Austin, he says you just tuned in, and did I cover gold and miners? If not, would I please? And I have not covered it, so you tuning in just timely. Your last name, by the way, my son played ball with a guy with the exact same last name as yours. This kid was just, have you ever seen somebody that is just an absolute natural athlete? I mean, the look, the everything. I mean, and he had the exact same last name as yours. I don't expect that you are the same, Greg. And I won't use your last name out here, but you do have the last name of a guy that has an amazing athlete. In any event, out here, and there was a posting in the den. Danny in Atlanta said, "Hey, how come gold miners, or how come miners?" And I don't know what he meant by miners out there. All miners, or some miners, or the GDX is not making a new high as gold is out here. Some miners are back up at the house. For example, here if we take a look at BTG, that stands for B2 Gold Corp. Right now today, this is up. This is a daily chart we're looking at. It's got volume behind the move of 4.7 million shares, moving into the top of its box. See how this price area out here is bullish? Price came down a couple days ago, tested that point of control area, the center of that box, 313. Very bullish setup. Says that price is going to go tag the high, 348. You're not that far away from it at 343. Volume is 5.6 million shares. So this equity, B2G, is actually moving into a swing point with volume out there. So that looks pretty darn bullish to me when we take a look at that. If we look at some of the stocks here, let's take a look at percentage changes to the upside. Harmony Gold, HMY, that is the largest move higher today, percentage-wise. Let's try to figure out what it is doing. I give my screen here a minute to populate. So this, pulled back yesterday with volume of about 7.7 million shares out here. And it's taken a while to go ahead. There we go. And as it was doing that, it was testing, really very much like gold, was testing the bottom of its TAS daily profile. And this is also set up as a bullish configuration. So the meaning here with regard to Harmony Gold, if you're in this equity, you should anticipate that a level of support held. And now price should go ahead and make its way up to about $2.89. You are trading right now at $2.75. If we go take a look at the GDX itself, let's go see what it is doing. And it's trading out at $24.56. Here's where we're going to see a little bit of divergence. Now, maybe not right here, but when I show the next chart, where is it? Yeah, I'll show the next chart momentarily. But as we take a look at the GDX, yesterday moving down with volume of 78 million shares out there. And that was in essence going against 56 million shares. Yikes, that's a problem. Going against 78 million shares back on the trading session here of January 24th. So pulling down with accelerating volume. Look at the volume that we have in it today. 24 million shares on the bounce higher, versus yesterday down with 78 million shares. The entire mining sector is not rallying. What does it mean? What does it mean? Well, inside the GDX, what it means is you have to go really take a look at the top 10 holdings, which represent a substantial portion of the entire GDX out there, and then you'll kind of get a figure or feel for it. B2G as a mining equity might not even be in the GDX for all I know out there. It's certainly not in the top 10 out here. So you're really at this stage of the game, while the market has moved sideways out here, and the mining sector has moved sideways. It's been moving sideways really ever since February 2nd. And today is February 23rd, right? So it's been moving sideways for quite a while out here. What you ought to consider, instead of playing the basket, is going to take a look at some of the stocks that look like the stronger stocks on this sideways-ish type retracement, ones that are moving higher out there. So, and here inside the GDX, it is struggling. Now, it is a struggle. We know one moved lower yesterday with volume out here. We also know that price is trading below Stevie's red line. Gold is trading above it. The GDX is trading below it. So, which one is telling us the right story? To tell the truth out here, I don't know. Here's what I know. The GDX needs to close above 25.13. You're at 24.56 as we speak right now. And it just simply needs to close above Stevie's red line to get back into bullish formation out here. So, Greg, I hope that helps you out. Danny, I know that didn't really answer your question per se, and it was really more of a comment out there. And AG says gold, GOLD, is one of the better looking stocks. Let's go. In fact, thank you for that tip. Let's go take a look at it. And voila. Now, this is a confirmed A to B equals C to the upside, 99.19 out here. Now, it is taking on a little resistance area. Remember, you had that little bearish reversal candle on February 9th. That says that the high of the prior session is the resistance zone, 95.05 here, 95.18. And that had volume of 1.1 million shares. Today, you've done 602. Oh, you got problems here in River City, I'm pretty sure. 602, is that what we said? Says you would do about 978,000 shares. So AG, you've identified one of the better looking stocks out here. And muchos gracias for that. However, it's taking out a swing point with light volume. I would anticipate that Royal Grand Gold out here, GOLD being the ticker symbol, is probably going to close the day below 95.09. You're trading at 95.29 out here. It just doesn't have the enthusiasm, the excitement. That does not mean that price is not going to head to 99.19. The gift would be, and thank you for pointing it out, AG. The gift would be for price to pull back to 91.58. No idea whether it will do that or not, but that would be the gift, coming back into the bottom of its daily box, doing it with less than, by the way, 653,000 shares, which was the volume from February 21st, just a few days ago. That would then be your next potential buy point. So I hope that it helps you take a look at miners out here and what they are doing. Let's see, any other questions? I'm just going to check the old phone here because I get those emails quicker, and because I do really like to just look at what it is that you folks need me to take a look at for you. That's really the whole reason, one of the reasons to do the show. Okay, so we kind of covered intraday, what the markets are doing. We've taken care of gold and the miners out here. We've looked at the currency pair, the Japanese. Oh, somebody wanted to look at the Great British Pound, I do believe. So if I take a look at the Great British Pound out here, BP. Oh, not the British Pound. Sorry about that. Is that, or was it BP? Oh, yeah, it has to be the Great British Pound, BPH7. So you're looking at the, what, BPH7? The pound. Yeah, okay. Well, let's just take a look at the pound U.S. dollar, and we can give you a feel for what it's doing. So we're taking a look at its daily chart out here, and it's just been trading inside a sideways range out here. The resistance zone has been the top of its weekly box. The daily box out here, to a certain extent, doesn't seem to matter that much. If we turn off the daily box, turn them off, trigger. There we go. All it's doing here, AG, at this stage of the game is really trading in between a narrow range, that price point being 1.2381 to 1.2539. You're trading slightly above that right now. I don't know if I would get my skirt up in a tizzy. Closing substantially higher there come tomorrow. That would be short-term or maybe change in trend bullish. Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 35 points. The S&P is flat. Have a request out here to take a look at the indices, the daily indices, look for any signals, things of that sort. So let's go do that. Let's go take a tour of the indices. Now, the one indice that has given us the biggest sell signal, we'll take a look at two of them, but the one that's really confirmed a sell signal is the semiconductor index. Now, interestingly enough, in one, you've got A to B equals CD patterns out here. I don't have those shown, but we do have those formed. What you do have is you've got a nice little seventh wave move. In other words, the semiconductors were singing in the key of G. I'm assuming that I can't assume anything. If today's session closes somewhere near where it's at, it doesn't even have to be near where it's at. It can be probably at 985, the opening price today. It will still give us a bearish reversal signal, a three-river evening star pattern named after the great General Oda Nobunaga. Or Oda Nobunaga. Yeah, I know I can get that correct. But in any event, you probably don't really care about that. But what you do care about is we've got a seventh wave move. We have the completion of an A to B equals CD. You've got price trading below Stevie's red line out there. That means that the price oscillator is turned down. So this is pattern-wise one of the more bearish signals that we are receiving. NASDAQ Composite, I mentioned the advanced decline oscillators below zero, but what price is really doing is testing Stevie's red line. Now, it is a few dollars below it. Looks like that red line, well, I won't tell you what it looks like. I'll just simply tell you what it is, right? Might as well, let's see if I can get over there, and will that give it to me? 58.3891. is the number. So another 6 points to the upside. All that it will be doing is testing a level of support. If it closes below it, then maybe. But I would say the caveat there is if the VIX index, if the liquidity gauge is not giving you the message that it's ready to, the market's ready to roll to the downside, when you can't trade the NASDAQ Composite, thankfully. So you'd be just simply, you'd just simply be neutral with regard to its message out there. Transports look kind of interesting out here today. For day number 2, they are closing below, or it looks like they're going to close below Stevie's red line. Today, it acted as resistance, a test and rejection of that area. So you get a nice little price relative strength divergence pattern. Confirmed yesterday, not until yesterday, with that little bear sash candle, and then confirmed today. So the transports also giving us a little bit of a sell signal or retracement signal message out here. We looked at the GDX, XAU, same thing out here. Price trading below Stevie's red line. It needs to get up to 94.15 in order for its message to get bullish out here. That is not the case. And to the extent that you believe that miners might lead the charge or give us a signal out here, maybe there's something to be said for that. For those of you that like to take a look at the Wilshire 5000, what we can see is that today it made a slightly higher high at the open. Now, what that means is that you now have the 6 of 7 potential legs to the upside. Price today, this is really taking a look at the U.S. stock companies out here. And we can see that all today was a test and rejection of a level of support, Stevie's red line. There is no bearish message whatsoever that you could find inside of the Wilshire 5000. Yes, it was a bearish engulfing candle. So what? That was nothing more than a little bit of a detour. What price also did was went down and tested a level of support. So that is, you don't trade just on candles. That's the whole trick to understanding Japanese candlesticks. And you don't trade just on patterns. That's the whole trick to patterns. You've got to combine the two. You combine the two, and then you have the power to unleash the power within your trading strategies out there. Take a look at the New York Stock Exchange, also making a higher high at the open this morning, taking it to likely leg number 5 of 7 that we would look for, and it was nothing more than a test of its oscillator on change line, 11.52098 to be exact. Didn't actually get down there to be exact, but it was close enough for our line of work. The New York Stock Exchange is not giving you any kind of a signal of a bearish message or a reversal, not even a bearish reversal candle. If we take a look at, hey, we've got a caller, so let's figure out. We've got Brent in Martinez, California. Hey, Brent, thanks for calling. How are you doing today?
Doing very good, Steve. How are you doing today?
I'm doing excellent. And sorry that I didn't see your call earlier, or it was blocked, but I mean behind one of my screens. But that's okay. We've got you now, and you want to take a look at ExxonMobil. So tell us what you're doing and how we can help you.
I would like your assistance in looking at this. I have kind of a little conflict between a couple of charts that I use or charting systems I use, and I just want you to look at it. Is potentially making a bottom here. The dates that I want to have you take a look at would be going back to July of 2016. That high I have at 95.55. And then it came down and made a low. I'm showing around, it looks like October of, I guess it'd still be, let me go back here. I'm about to do it. No, that should be still 2016.
Yeah.
And then it came back up and made a lower high. Let me go to
December 13th.
Yeah, exactly. Of the 93.21.
Yeah. Yep.
And then now it's come down. And so is that an AB equals CD if you put the whole thing together, where it came down to this most recent low, just a couple days ago or yesterday, I guess?
So the full 1-to-1 would take you to 79.98. The actual low yesterday was just slightly above that. The actual low yesterday, let me move this out of here, was the price level of, move that down there actually. It got down to a low of 80.87 versus 79.98. So really close. Let's say that you were going to trade this as an A to B equals CD, and we were going to say that it had completed. Then today's candle right now as we speak is actually a bullish reversal signal. But it's all going to depend upon where it closes. It needs to close really above yesterday's open, which would be $81.65. I would hearken a little caution in that it's I'm going to take the A to B equals CD pattern off the screen, and I was actually looking at ExxonMobil and a couple of others inside of the XLE yesterday myself. And one of the things that just flashed caution to me was a mere fact of how price is trading below its daily profile. And these profiles here, I'm going to turn off the weekly profile for you and for everyone else so that they can see them. And the profile that was in place, this was actually a bullish biased box area, which means that price should have been able to have held that 82.37 area. And on February 17th, when that fell with some volume out there, that said that there was a problem. And yesterday, it actually took out the low of a hammer candle from February 21st when you saw it close below 81.30. So I wouldn't let today's bullish candle, as we speak right now, get me into that trade. I would need to see something else out here, such as closing above resistance, which I would call 82.37. And that's not much of a. Hey, can you wait for the break out here?
Sure, I will.
Okay.
Thanks.
So we'll go back to Brent in Martinez, California. We'll take a look at ExxonMobil because it is really worth looking at because it is trying to form a Gartley buy pattern. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We're on the line with Brent in Martinez, California, and we're taking a look at Exxon Mobil, and Brent is considering it for a buy. In that last segment, we looked at the possibility of a completion of an A to B equals CD pattern. The chart, Brent, that I put on my screen here right now, the top portion of the chart is the continuous contract for light sweet crude, and this takes us back to the 2013 timeframe, and the bottom panel is Exxon Mobil. And the reason I put this on the screen is the direction or the price direction of ExxonMobil isn't always influenced by the direction of light sweet crude, but oftentimes there's a fairly decent correlation. And the reason that I throw this out there, and this is where I'm a little bit perplexed. As you know, one of the things I like to look at over the weekend is I like to look at the futures data that the CFTC puts out. And I like to take a look at what large commercial traders are doing as a percentage of open interest. I also like to take a look at what the small group of traders I refer to as non-reportables. And like to take a look at how have they positioned themselves this week compared to prior weeks out here. And this is the thing that is, I'm just going to throw out, is confusing to me. I have not been able to resolve this, to figure this out. What I can share with you is that large commercial traders, as a percentage of open interest, have taken the largest net short interest in light sweet crude than they have in like a long time. And that means they're anticipating that light sweet crude is going to move south. That's at least how I read their signal. And then at the same time, because I also know light sweet crude is in fact influenced by the U.S. dollar index. There's a decent correlation there, better with the Canadian loonie and maybe the Mexican peso. But nonetheless, they're also positioning themselves for the U.S. dollar index to make a move lower out here. So in my mind, I've been trying to grapple with how is that going to happen? Not that it can't happen, because it most certainly can. But in this case here, light sweet crude hasn't really done a whole lot. It's just been trading sideways, and it's been trading sideways in essence, we can say, since December 13th. Whereas ExxonMobil has really been taking it south since that same time period, 92.56 versus 81.72 as we speak right now. So, I don't mean to cloud your mind with additional information that, may or may not impact the trade. I think that it does. On a weekly basis, I'm concerned with ExxonMobil because it's broken a rising price trend line. Just starting with the lows back here in August of 2015, and then the hammer candle from January 18th, 2016 out here. So that's been broken on a weekly basis. It's broken through a bullish swing point out here, which was the week that began September 26th. So that says the low of 82.31 the prior week was an important level of support. That has failed as we speak right now. And then that would suggest to me that ExxonMobil actually still wants to move lower. When I try to put all those things together out there. So I hope that helps you. It doesn't confuse you more.
Considerably. No, that's very much so. Because there is the potential to go down in the 70s, too. I just look like, this might be an area potentially. I'm just going to have to watch it. That's what it comes down to. Like I said, it needs to show a little more conviction that this is a bottom, and so I'm not going to commit at this point.
Yeah, no, I can see the reasons. And really, when I take a look at, just like the XLE as an example, we know that this makes up ExxonMobil, Chevron, Schlumberger make up the largest weighting inside it. What I'd like to see is it take out the most recent low and then get to maybe that seventh wave move. Because back on February 8th or the 7th, that was letter F or wave number 6. So I'd like to see this thing go a little bit lower. The XLE I'm referring to, and then we take another look at it.
All right, well, enjoy the rest of your day, Steve. Take care, and thank you very much.
You bet. Thanks so much for calling, Brent. Steve Rhodes with TFNN. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.